Hello friends, welcome. Hope your preparations are going on well. Today I bring to you some important points you need to keep in mind to avoid making silly mistakes which would surely help you boost your score. I have divided this particular session into two parts. In today's session we will discuss the first 5 points and this is related to the topic of partnership fundamentals. So let's start. The first point that you need to know where silly mistake normally occur is that in case there is no profit, then you should know that you cannot appropriate. There will be no appropriations allowed. So first for that you need to know what are the appropriations. So appropriations are in the form of interest on capital, the remuneration to partners in the form of salary or commission which is given to partners. So these are the appropriations. In addition to that, they can be even transferred to general reserve and so on. These are called as appropriations. In case there is no net profit, which means there is a case of a loss, then in such circumstance, although in the partnership deed there is a clause related to these appropriations, still no appropriations would be allowed. Whatever is your loss, you would be giving away to the partners by debiting the capital account in their profit sharing ratio, unless interest on capital has been provided as a charge. So the exception that you have to remember is that in case they have provided interest on capital is to provide it to the partners as a charge. So then under such circumstance you have to remember that it would be put into the profit and loss account debit side, and your loss, already you have a loss, existing loss, no profit. So there's a loss. That loss would further increase by the interest on capital because it has been agreed in the partnership deed to consider that as a charge. So that's the only exception that you have to remember. In all other cases, if there's no profit, you do not provide for any of this. All of this are not allowed. So this is the first case where students make mistake, and the mistake that normally is committed is that they provide for appropriations and increase the loss, and the increased loss is distributed in the profit sharing ratio, which is entirely wrong. So please be sure about this. Next is net profit is less than appropriations. That is, in this case you have net profit, but the amount of your appropriations is more, which means your appropriations might be say rupees 50,000, but your net profit is say only 30,000. So in this case you have to remember that you cannot allow the entire 50,000 because you have just a net profit of 30,000. So in such circumstance you will have to find the ratio of appropriations. Then what do is that in that particular ratio you divide the existing net profit amongst the partner. So only 30,000 would get divided in the profit in that particular ratio of appropriations amongst the partner. For example, if this particular appropriation is related to interest on capital, and the interest on capital A and B was going to be 25,000 and 25,000 respectively, then under such circumstances this ratio is 1:1. Therefore, the available 30,000 would get divided between A and B as 15,000 each. You will not be allowing 50,000. Only the available net profit has to be divided in the ratio of the appropriation. So this is another important point where I have found that students just take 50,000, provide the entire 50,000 as appropriation, convert the profit into a loss of 20,000 and distribute it, which is totally wrong. Please don't do that. You can only distribute the profit to the extent you have it. You can only appropriate as much as net profit you have. So this is another important point which has to be taken care of. Moving further, next very simple one, very commonly made mistake due to lack of understanding, it is that profit sharing ratio is not given. So if in the question you find that the question is silent about the profit sharing ratio, then please do not take the ratio of the capital. The mistake that is commonly made is that students go look at the capital balances, they take the ratio of the capital balance and divide it, take it as a profit sharing ratio. No. When the question is silent about the profit sharing ratio, then you should take the profit sharing ratio as equal, which means if there are two partners A and B, then it would be half and half. If there are 3 partners, then it will be 1/3, 1/3, 1/3, and so on. So there's another important point where the mistake could occur. So please remember, when profit sharing ratio is not given, you take the profit sharing ratio as equal. The partners are considered to be equal partners. You cannot assume any other ratio. Then going on to the next, where common confusion is found, is about the term net profit and divisible profit. Normally this thing you have to understand is that whatever is the amount getting transferred from your profit and loss account into your appropriation account, that amount is the net profit amount. Whereas divisible profit is a profit which is left after from the net profit you subtract all the appropriations which can be allowed on the basis of the profit. Whatever is left, that is called as divisible profit. The other name is distributable profit as well. So that difference has to be understood. That net profit is an amount coming down from your profit and loss account to profit and loss appropriation account, while divisible profit is a profit from the net profit which has come down from the profit and loss account. You allow all the appropriations to the extent as is agreed in the deed, and whatever is left, still the surplus, that is called as either divisible profit or distributable profit, and it gets divided amongst the partners in their profit sharing ratio. So whatever is the profit sharing ratio, in that ratio you would credit it to the partner's capital or current account. Now normally the other thing you have to understand is that sometimes they say commission to a partner is to be allowed. Now when you get this, please read it carefully whether the percentage is on net profit or it is on divisible profit. So that point you have to be careful about. Sometimes they give the commission is to be allowed to pay at the rate of 10% on net profit. Then you have to take the amount coming down from the profit and loss account appropriation account, which is there on the credit side of the appropriation account. You apply the percentage. But if it is percentage of divisible profit, then after line appropriation, whatever is the balance left on that amount, you have to calculate that particular percentage and find out the commission, put that amount. So this is the area where commonly mistake is made. So please understand, read the question carefully when they say percentage is to be applied whether on net profit or on divisible profit. And now next point that we have, where normally the students get confused, is that there are only 2 items related to partner which are treated as charge against profit. What do you mean by charge against profit? Charge against profit means the item would come into the profit and loss account on the debit side, like your other expenses like your rent, salary and so on that is paid to the employees or for the office premises. It is treated as an expense. So the only 2 items related to the partner is interest on partner's loan. That is a loan which has been given by the partner in addition to capital contribution, which you can see on the liability side of the balance sheet. On that, when interest is allowed, that is a charge against profit, means that amount would go into the profit and loss account, not into your appropriation account. It's not appropriation of profit. Similarly, there is a possibility that partner might be owning a building and he might be letting it out to the firm. Then under such circumstance, the rent that is paid by the firm to the partner is also an expense for the firm. So again here it is treated as charge against profit, which means you would put it into the debit side of your profit and loss account like any other expense. So remember, only 2 items related to partner which is going to be treated as a charge against profit is interest on partner's loan and rent to a partner. All other items that we have related to a partner are going to be treated as appropriations of profit. That is, in case it is agreed in the partnership deed and provision clauses are there, then interest on capital as has been provided in the partnership deed, the salary to partner, then if the remuneration is in the form of commission to a partner, then all that is allowed to a partner on the basis of the provisions in the partnership deed. So only allowed when it is provided in the partnership deed, and that is all appropriation profit. So only two items which are charged against profit is interest on partner's loan and rent to a partner. So I hope with this you have, so friends, I'm sure that this session has been of great help to you to identify the areas where mistakes could occur and you could avoid them. So please stay tuned for the next session where I would be discussing 5 more points related to the same topic of partnership fundamental, where silly mistakes could occur and where by avoiding them you would be able to improve your score. Now, if you like today's video, please do like and share it. And if you have not yet subscribed to the channel, please do subscribe to the channel to get continued notification of all the upcoming videos. So see you all soon. Thank you. Have a great day.